Welcome to TradeTheMBI.com. This is John. This report is for the 2nd of February, and you can see we've pretty much come back. We had the positive extremes on the daily right about here. We came back, filled it all in still. No real change from that standpoint. We've been in a soft cycle. We had this pop up here, which usually is an indication when you get that kind of move on the orange DOC, we usually see a little bit of a fade, which is exactly what we're in the midst of, and we've been trailing down ever since. Now, we've seen short-term buyers come in to hold this, but we've also seen an activation of shorts, and they're now positively on the upside, which is an indication that they've made an active play at this particular point. Not bad. We've got relatively modest move here from the long-term buyers in the red. We can see midterm buyers sort of fading in, and a lot of this is just the indecision of where things are. They see the amount of stalling that's going on, so there's a concern that there could be a significant delay in any kind of high-paced action, which is something we've been talking about for a little bit now. Once we get to the peak moves, there was all this exuberance that led up to where we are. Now you're going to start seeing earnings coming through and everything, and so the expectations of where things will be. Obviously, the Fed is, I think, crippled at this particular point, but you never know. They could sabotage things and make it worse. It wouldn't make any sense to do that. At this particular point, that even tiny increase clearly caused a slowdown, even as it was, and there's still a significant time lag before anything happening and the real world effect of it. So at this particular time, we've got Euro rising. Trump is bashing the dollar, trying to get it lower because he knows that'll help exports. And we're right back in the range. So, I mean, this has been here for, I don't know, we can't even go back how far. I've had this set up here between the, 107.5 range all the way up, and we're just in the inside of that. And every time we got down into the danger zone, central banks stepped in and bought up whatever supply they could to keep that elevated. Brit exit looks like it might be back on track, so that should have an interesting impact as well. And there's just a lot of uncertainty as to how things will move, and not that they're going to move adversely. It's just the question of how long will it take. And of course, we've suggested that while in the short term that could actually be beneficial to treasuries, still same expectation is for them to move lower, particularly in a higher rate environment. And look at that, it just hasn't moved on oil. It's not likely to. It'll be interesting if there's a uptick in the Iran situation and there's talk of renewing sanctions, then you could see a modest blip up. But again, that supply drain would be filled rather quickly, and gold, with the little dip, still going to be a safe haven play without question. So intraday, we ended up with the shakeout here. Started its sell signal right in about this range, held flat for a little bit, and then it just really started to collapse. And then we just went into a sideways motion. We ended up with a decent buy that was sort of like right in between here. As things started to move positive, we just stayed flat, and then a little bit of a bump. Didn't hold very well. We got a similar one a little bit later in the day that came across, and then we got up right near this 2280 range. It was right here at that 78, sort of the peak of it, and we could see that things were getting soft as we ended up with another DOC spread that started here, and then the steel below, and then we ended up back and forth with the orange. So there was a chance that it was going to potentially try to hold on, but you could see that cascade of long-term buyers just was fading dramatically fast. We're getting into that oversold bounce area right now in pre-market, but does a nice little decline filled in all the way back to here. So we've got positive extremes that were all the way back at this particular point the other day that have all been taken out and filled now. Very healthy. So it's more back and forth action, and that's good. The volatility increase is exactly what we've talked about seeing, and I think we're starting to get a little bit more normalized market flow. All in all, should present some nice intraday action. Daily, unfortunately, I think that we're just sideways to slightly lower at this particular point. Not going to get much benefit out of that. I think another day or so, probably 2 days, we're going to start to see inflows of new funds for institutions, which should have a positive net. So if there's a slight decline going into that, that should be an opportunity to see movement to the upside. So we'll keep an eye out for that. And as always, I will post the charts on the Skype chat. Trade well.